YouTube, welcome back to the Investing on a 9 to 5 YouTube channel. It's your boy, the Dividend Dog. And on tonight's video, we'll be going over 3 high yielding dividend paying stocks that is under $50 that you guys could potentially add to your watch list. But before we dive in, want to give you guys a shout out there, 9 to 5ers, for getting us over 90 subscribers to start the year. Kudos to you guys. It's helping the page grow and also keeps you guys updated on the content. And also for you new subscribers that haven't hit the like and subscribe button, we see you. I'm kidding. But don't forget to hit the like and subscribe button as well so you guys do not miss out on any future content. So our first member on the board will be Medical Properties Trust, ticker symbol MPW. They are specialized in the healthcare facilities industry. They're a REIT. We all know REITs are real estate. They have over 430 facilities worldwide. They are specialized. They even got 43,000 licensed beds in 9 countries across 4 continents, guys. So as you can see, they are in a hospital like mega house. Pricing right now is at $12.96. It has taken a complete beating year to date, but we're going to uncover why we think it's a value. And also right now, Yahoo Finance has got this undervalued as well at $14.06 from the $12.96. They got a 1-year target price on her at $15.46. This is not guaranteeing anything. This you can go on any other website, guys, and it may give you a 50 cents lower or a dollar higher. Just gives you like a range, and you make your best educated guess on it, on if you wanted to purchase into it or not. It's got a 7.75 billion market cap. They pay the dividend quarterly. So yeah, we're going to dive into them. Once again, they're spread out worldwide. If you see yourself here on the map and where you live at, they more likely have some facilities near you, which is cool. And this is another facility in Illinois that they own. Once again, another smaller facility. So this is how their lease structure is set up with MPW. The tenant, which are the hospitals that are obviously operating in it, they bear all costs, including maintenance, repairs, utilities, and taxes. Long-term leases, so everyone that locks in is there for 10 years minimum, 20 years, or 10 to 20 years. Sometimes they'll do a 5-year extension if you're in the U.S. Longer terms are international. And they're inflation protected, which is good for investors to see. And they're master lease, so 95% of the properties are master lease through the parent, which means they are going through MPW. So diving into this screenshot here from Seeking Alpha, this is basically from a short write-up from when the stock obviously went up 8.7%, I think last Thursday, after Steward Healthcare finally got their credit extension, because at one point, guys, they were refusing to publish any financial statements, making it harder for us MPW investors to examine like their financial health to see, you know, if they were profitable or not. So bears, which are the guys who sell or not sell, but they sell puts on stocks, meaning that they are betting that the stock is going to go down. They just started doing that because there was no answers to none of this information. So once this information finally came out, they got the credit extension, which is needed for their negative free cash flow. The stock jumped up 8.7%, which was good news. So we're going to dive into their dividend payments. Since 2009, they've been increasing the dividends solid. They have a dividend yield at 9.37. They pay out $1.16 per share annually. They have a 5-year growth rate at 3.86. So the 5-year growth rate, guys, isn't where I would like it to be. I like seeing my 5-year growth rates to be like 10%, but I also get stocks that are between 2 and 5%. So once again, high yielding means that this is over 5%. Some investors out there have different thresholds for what they consider to be high yield. But for me, anything between 2 and 5 is low yield. Anything over 5% is more likely a high yielding stock. But especially something like MPW, we have to go in and make sure we dissect and make sure this is a solid growing company with a solid growing dividend, because that's what we are. That's what we're in the game for. So this is just the chart here, based off of since the last time we talked about the stock running up 8%. This is what it basically looked like, and as you guys can see, the stock has been trending down. Now we're starting to make some type of positive trending off of the bottom here. We had a multiple bottom um, last November and October, so looks like we're making some positive traction towards it. Looking forward to see what we do this year. Next up, Altria, family of companies. I don't know why they have family of companies here, but it's Altria, aka ticker symbol MO, MO. I call it Mo Money, Mo Dividends. So we're gonna dive in and talk about who these guys are. So Mo is they are a tobacco company. They have Philip Morris, U.S. Smokeless Tobacco, John Middleton. They have Hellas Innovations. They even have service companies to help out distribution and with their clients internally. And then additionally, they have on AB InBev, which is Anheuser Busch, which is like Budweiser, Juul, and Kronos Group, which are both which is a cannabis company, and Juul is the e-cigarette. So as you guys can see, they are not just like strictly tobacco. They have the Budweiser, and they have the cannabis, and they also have the e-cigarettes too. And obviously, they call this stock here a sin stock because we're not obviously no one likes to smoke, and that's obviously not good for our health out there. But this company here has been paying a solid dividend and it performs well in the stock market. So we're going to dive into them, guys, here. So ticker symbol, once again, MO for Altria Group. They're at 4606. Ticker symbol, or I mean 4606 price. And for the year, as you guys can see, it's down as well. Right now, it's just kind of I think it's more of a consolidation phase. Kind of has no idea what it wants to do. But 45. 99 previous close, 4606. Nope, I don't like this. Let's go back. Next up, we have Altria, family of companies. Ticker symbol MO. So Altria is comprises of Philip Morris USA. They through its tobacco subsidiaries, they hold the leading position in cigarettes and smokeless tobacco in the United States, and the number 2 spot in machine made cigars. The company's Marlboro brand is the leading cigarette brand in the U.S. with a 43% share in 2020. Altria also they own strategic investments in Juul, Labs here, and then they also got 42% invested into a Kronos Group here, and they also are invested into Anheuser-Busch, which is Budweiser. So this company here is obviously a tobacco company that's been paying a strong dividend for years, guys, for years and years and years. Strong dividends growing. So we're going to dive in and look at their little finance summary here. Closed right here at 4606 on Yahoo Finance. Got a market cap at 87 or at 82 billion. Remember, guys, MPW had I think like 7 billion. This is 82 billion. So this is huge, a huge company. They have a 1 year target price of 49.07 for it. Got an 8.19% dividend yield. Once again, doesn't grow the dividend a lot, guys, because it's paying a lot of the dividend. And right now, they've got a dividend streak right here at 33 years. So, once again, I like the dividend growth to be at at least none least than 10%. If we're investing long term, if we can help it. But this company here has a strong dividend yield that's been growing, and they've been increasing it, for 33 years. So, you can say it, hey, I can dive in and maybe take a gamble and get into this company. Not financial advice, but this is MO Altria Group. So their last earnings report, it was released. They missed the consensus estimates by 3 cents. The business had revenue of 5.4 billion quarter, and they were had an estimate of 5.59. So revenue was down 2%. But that's nothing for me to lose sleep over, honestly, because I go in the store now and I see, their products all over. I see Anheuser, I see Budweiser. People are drinking. People smoke every day. So those things are happening. While we sleep. Next up, we'll be looking at them as an economic moat. They have intangible assets, such as an addictive product, and it's very hard for any company to enter into the tobacco industry to give them a run for their money. I like too for investors that they linked up with Kronos Group, just to tap into the cannabis industry, because that's going to be a huge industry that's going to be growing in the future. And once again, they are just adding on cash flow. Dividend charts, as you guys can see, since 09, the dividend has been increasing. It's had increased this year 8.3%. Intel, INTC is the ticker symbol. Price right now is at 29.32. Dividend tracker is giving it an 86 dividend grade. As far as like safety of dividend, wanted to give a pullover of that. But Intel, for anyone who doesn't know who they are and what they do, they supply the computer industry with chips, boards, and systems and softwares that are primary key components to computers and anything that needs a chip. So basically, once again, a item that is needed all day, every day, 24/7. Intel, supplies that. Now they have had a challenging quarter. Intel posted on the third quarter revenue was very low. They had a very low expectations. The company's current quarter guidance was below pre-reporting consensus expectations, and the company again reduced its sales and earnings outlook, for all of 2022. But this is still a buy, and they have a history of processes of chip technology. Another reason why I like Intel, guys, is the CHIP Act, which is the chips by Congress. Joe Biden signed this thing, which is the Act basically is going to provide roughly $280 billion in new funding to boost the research and manufacturing of semiconductors in the United States. Now, I know the market is probably selling this off, and the charts is looking like they're not going to make a recovery. But Intel, guys, is doing some heavy lifting in the back end with some very, very powerful people. So Intel's plan, they have a $20 billion plan to build a chip making hub in Ohio, in Columbus. Obviously, they're going to have a problem here. We're putting everybody, but I wanted to put this article out here just to show you guys that Intel and the president are, they're hand in hand with each other out here. They're going to be doing huge things. So this is just like a mock-up here for what the campus is going to look like down in Columbus. So they are putting a hub here. They're making chips here in America, right in Lincoln County, Ohio. Shout out to all my Ohio people out there. But Intel is going to be placing their plant there, which is going to be huge for competing at the end of 2025. And this is when they plan to make this full effect. So Intel is getting pushed, and they're also getting funding from the government. So once again, price is not the reflection of the company. Earnings per shares has been shaky, which is fine. I'm looking towards the future, and by them being one of the main components in that CHIP Act, this is that's a seller for me as an investor to say, hey, maybe I want to put some coins in here. And I finally got up to 10 shares. I'm on my way to 100 shares in the company, and then I'll show you guys on the progress of that. But at the bottom here, we see our earnings obviously decreasing, been shaken down. But Q1 2023 all the way into the Q4 of this year, we're starting to see some increases. What do you think is going to happen in 2024 all the way and so on once we get this plant here rolling up? Things are going to start moving forward in the semiconductor area. It'll be a good time to take a look at this company here. Not financial advice to buy, but to take a look at, to maybe once again, guys, to add to your watch list. Dividend growth has been steadily growing. Once again, 5% yield is once again 2 to 5%. Anything over 5% is considered high yield. Once again, 4% growth. So once again, doesn't grow crazy, but it keeps a steady flow going. And they've been increasing it for 30 years. And their dividend payout ratio is 45%. So they have enough cash to pay out the dividend, guys. On the left here is my Intel. This is about 10 shares that I purchased in the company, and they're already up 15% since when I purchased them. And as you guys can see, I've just been dollar cost and averaging in, haven't put this all in at one time. And on the right here, you see I'm down only 5.46% on my MPW at 143 shares owned, even though the stock is saying that it's gone down, tremendously. But I've been dollar cost and averaging because I believe in the company. I believe in the future, and I don't think hospitals are going anywhere in the meantime. Guys, I thank you guys again for hitting the like and subscribe button on our channel and helping the page grow. This is your boy, the Dividend Dog, on the Investing on a 9 to 5 YouTube channel. Thank you guys again, and we'll see you guys on the next video.